The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 19th day of April. My pleasure to be here Monday through Friday. Thank you to our wonderful hosts. Let's see if we can keep that high standard up here. And what is today, Wednesday? So after me, we're going to have the Think or Swim team on the options. Great show. Followed by another terrific show, Steve Rhodes. Then you've got Dave White, outstanding work that Dave does as well. Just goes on and on. Tom O'Brien, 3 to 5. I mean, what more could you want? Let's look at the markets. I'm going to do this now step by step because tomorrow night I have a webinar. I consider it to be a timely webinar in that it is going to focus on, this has been a consolidation. What happens when the consolidation completes? Is it close to competing? What's going on in the different sectors, and which stocks and sectors should be ripe for a really strong move up in the next big phase of the mega bull market? I think this hiatus is here for a little while longer. I know that a lot of people are itching to get on board the long side. Just have patience. I think you'll have a chance. Let me explain what I'm looking at. I'm going to go step by step here. Let me just run the numbers. The Dow's down 25 at 20,498. It just hit badly by IBM. Looked terrible yesterday before the earnings announcement. So it's even worse today. S&P right now is up 627 at 2348. The comp index is up 36 at 5885. The comp index is still seeing more buying than any of the other indices, and that's this residual. We saw that down the S&P after that March 1st high. They didn't just go plunging. They kept trying to get back to the high and fading. So what we've seen is lower highs and lower lows. Here's the chart you can see of the Dow. But let me just continue so that we can finish up with these things. Gold is down sharp. It's down 12 at 1281. And this is going to be quite important. Silver is also down 7 cents at 18.19. But gold has had a spectacular move. I'm going to get to all the indices in a moment. I want to talk to you about what I'm going to be discussing next week, tomorrow night. That is tomorrow night in my webinar for subscribers. It's only for subscribers, but you have a fantastic opportunity to be able to come in free, at least for a trial subscription for 30 days. And you'll see if you like it. You know, for those people who have already gotten bored, I think you might have been able to make some money already in some of the positions. Ironically, the long positions that we've had to the upside in particular stocks in this environment. So this is fascinating. So let's go on. High-grade copper is up 45 cents at 253. I don't like that at all. Not a good sign. Crude oil is down 26 at 215. Bonds are at this point, you're looking at 154.5, down 22.30 seconds at a spectacular move. I'll put the gold, like I did yesterday, I'll put the gold and the TLT together. I'm going to discuss them in unison. And we're looking at the dollar at this particular point, up 25 cents at 99.65. Hitting the 99s, I said, it's going to be tough for the dollar, and we'll talk about that in a moment. Let me go one step at a time. And then the euro, we'll also look at the euro. Let me just go through this, as I do for my subscribers every day. And what you'll get is a free subscription. So what you're going to get, let me just do this because it just makes it much easier. I show the Dow. Is this the daily? Is that the daily? Yes, that's the daily. I discuss it in great detail based on the Chapman wave methodology. Yes, we are short the Dow from way back over there. It made a high at 21,169 back on the 1st of March, as I said earlier. That was Chapman Wave 5. It's one of the techniques, and I love to test my techniques out for years. Sometimes, this is 2 years I've been testing this particular technique out. We'll see if it's going to work. This time, it's worked fabulously in the past, although there have been occasions where I've had to move the number to the right, but I didn't get my signal until I said, we've got the signal and we're going to act on the signal. So that's very important. And here I showed without the MACD and the slow stochastic, on this one here, with the red one, is the 20-period exponential moving average. You realize that this will be the 20th 20th day, if we close under the 9-period moving average, the 20th successive day that we've closed under the 9. This is really remarkable. So let's go on, and I'll show you that the MACD and stochastic are still very weak. And my contention is that we will go down to a Chapman wave 5 as soon as we break 20,000. If I can see the darn thing, 20,500, just over there, that trough C that was made 3 days ago. But there is another trough C. So this is an inside sell mode within the larger sell mode of the daily. And that's suggesting that we're going to break this to the downside. And then you get what I call an overlapping wave to the downside. I don't want to go into it right now, but an overlapping wave to the upside. We know we've done it many, many times. I don't often talk about the overlapping wave to the downside. It's where you've got a trough B or a trough C. And within that, you get a smaller trough A, B, and then a C. And then what happens is when the C is taken out and it starts inside buy mode, sell mode goes to a leg D, it goes straight down. Immediately, it goes straight down to the 20,412 trough C, which was Chapman wave 3. And that's when they come together and you get an acceleration where it's like the highway. When you're coming onto the highway, you're coming on the access road. And as you get onto the access road, you have to accelerate to get going with the traffic. So you've built up a lot of momentum. And that momentum should take you underneath 20,412, and it should be really within a few days. Okay? So that's what I discussed. Then I discussed it, not only that, then I go into great detail. The 100, whoops, this is not the right one. Let me just get out of that. Then I go into the 120-minute chart. And I discussed it with the Chapman wave. And what I'd said is we had a perfect 5 to the top. We've got a perfect 5 to the bottom. And now we've got not leg 1, but this is the X that starts the move to the downside that we had 1 to the downside, Chapman wave 1. There should be a slightly higher high so that I can get my 2. And then we'll see if we get the 3. I mean, this is all speculative, obviously, but the MACD and stochastic suggest that the Dow is going to have a tough time holding. And if there is a sudden wave of selling and the Dow can get to below 20,000, I'd say 20,480. Right now it's at, 20,497. I think we might start an acceleration down. Okay. So that's the 120-minute chart. Then I always send out the overview, and the overview puts the whole package together, talks about what's working, what's not working, etc. I talk about that General Electric has had a very nice move, which shows some internal strength. Of course, earnings come out on Friday morning. IBM looked terrible. Triple M looked quite good, and UTX had a lovely rally. It's acting pretty darn well. And that's talking about the rotational aspect. And what I talk about for my subscribers is I say that the stocks that have had the 5-6 weeks of consolidation are going to hold up better, and that the new stocks, and that'll be the Nasdaq type stocks, are the ones that are going to see further weakness. All right, and then I talk about my 5 quadrants. Here's the 120-minute Dow going to lower lows and lower highs. Here's the VIX, because I think the VIX just for the shorter term is done. It's down. It's at 13.57. It's down 85 cents. So that's showing that fund managers and hedge fund managers are kind of tired now of shorting, and they're really looking at this as if to say, well, we've done our job, we've got our positions in place, let's see what happens next. Then I'll explain what I'm looking at for the next couple of days, and then I always put in the E-mini. I think that's the E-mini. Yeah, I talk about the E-mini, and I give parameters for that every day.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Let me just finish up here. C, I believe that's a D, a C, and then get C or D. Okay. So as I'm finishing this, we're going to go to our first caller, and I just wanted to show you. So what I'm looking at here, and then all these different charts that I show right here. Oh, that was wrong. Right here. So that, and then I show the E-mini, and I show it in the daily, the weekly, and the 120-minute chart right there, and I give it a little discussion, and I usually post this as well into the den. And then I go to my Traders Corner with all our different positions. Let's see what we had here. We had 19 positions plus a whole list of what we're looking at. So this is basically what I do every single day, and then I show the charts of the different whatever we're looking at or whatever we have. So that's what you get with the trial subscription besides the webinar tomorrow. I want to go to John in Philly. John, how are you?
Good morning, Basil. Thanks for taking the call.
My pleasure.
Say, I wanted to ask you just real quickly, then I'll get off the line, about the NASDAQ 100 futures, the NQM7, and two questions. One, this bounce that's occurred since the low Sunday night.
Yep.
Sunday night and Thursday late.
Yes.
This bounce, do you see this as likely failing and then making a trading leg lower? That's number one. And number two, do you get any signals using the Chapman wave count in your technical studies using the 5-hour chart? And I ask that because it's starting to get advanced. And I know a student of yours, a former Denner named Saratoga Bob, used that very successfully in trading. So I wanted to ask what that tells you now, please.
Wait, the 5-hour, that's 600 minutes?
I think that would be, 300 minutes.
300 minutes. Yes, yeah, okay, of course. 5 times, 5 times 60 is 300 minutes. I doubled it by mistake. Of course, that's not a very good thing to do. Anyway, I've got the 6-hour chart, which has just made a leg D. So let's go to the 300-minute chart. What I'd like to do is, if you don't mind, I'm going to take one moment here. I just have to find it. Here we go. Status, nope, and here we go. Okay, so within the context of what we're looking at, I'm going to answer your question to say that the NASDAQ was the last to give a signal for me, and it's only given a sell signal, and that's going to be very important. So I've got the 300-minute candle. Will it be the same? A, B, C, D? Isn't that interesting? It doesn't go to an F, and then it's remove. So this will be, okay, very good. So I've just done that in a split second. I've given you the Chapman wave. No. This is, that's interesting. 5405.25 and 5405.25, double. So that goes down. Okay, let me just show those of you who use Chapman wave methodology something very interesting right now. This is an A to B, and that's a C. Okay. So what I'm looking at here is that was an A, a very big spike to an A. It could actually be an F. It doesn't really matter because you restarted, and I'm going to go A, B, and there's no new high. Yes, there is. 8, there it is. 8, 9. Okay, 8, 9. And so that goes, yeah, I'm just giving you the numbers. 54, 28.75. Then it goes to 54.28. So that's a peak. Then it goes to 54, 28.75, and then it pops up to 54. Okay, so what I'm looking at here is a peak C1, C2. Let's call it to make it as simple as possible, peak C1 and C2 right there. Okay, I'm done. So this is what I'm looking at. The rally that we've just seen in the NASDAQ, the NQ, this is the June contract. And let me just do this for 1 second to show some of the techniques that I'll be discussing. They apply equally to whether it's a 2-minute chart, or in this case, a 5-hour chart, or a monthly chart. The same techniques are applicable. So there we go. So there's a left side, right side price time match to the high of noon on the 11th. And I'll make this green so people can see. And there's a cup formation. So it's going to be really important. If there is a breakout from here, let me just do that to show exactly what I'm doing. And there you go. So if there's a breakout, the breakout should have the left side high that was made back on at 11 o'clock, exactly this time on the 10th, a few days ago of April. There was this large cup formation. It's really more like a bowl formation. And this rally has got the MACD strong, stochastic strong. So I would not be surprised if it can go a little bit higher than it is. But my thinking is that somewhere in the area of 54.43 to 54.45, it's probably going to stop. Now, let me go back. So that's the chart that you wanted to see. But this is really important. You can see here the Dow gave me a sell signal very soon after the high of the first. The S&P, SPEPX.X, gave a sell signal exactly the same way right there. And we are short the S&P as well. And that was after 2,400 was hit on the first, pulled back, and it's been making lower lows and lower highs. There is an arch formation that's falling, and the MACD is trying to flatten out. The stochastic is making a slightly higher low, but doesn't look all that good at this particular point, but it's the weekly chart that I'm looking at. So now what I want to do is to give that relationship of the 6-week correction that we had when all of a sudden the QQQ series, this is the PowerShares QQQ Trust Series, which is the NDX 100, which is what we're looking at in the futures, went to a high, that spike high the other day on the 5th. It went to a high of 133.48 and then gave back a chunk, and now it's been making lower lows and so far lower highs. Now here's the big issue. The issue is that this bounce that we've just seen, so far I'm calling it a bounce, fits into the context that in the daily chart I've got a sell mode. That's just an explanation that the technicals are very weak and the price is closed sharply below the 9-period moving average, and it's done that actually consistently for a while, except for today it's higher. So that says to me that on the shorter term, we're looking at the potential for the NASDAQ to finally start joining the others, and the others basically with a 3.5-4% correction. This is very mild for 6 weeks. So my thinking here is that the rotational correction is going to continue, and that we're looking at areas like the semiconductors, like certain key stocks in the NASDAQ that are going to become a drag. We've got just a handful of stocks, I believe, that are already pushing the Qs higher, and I think that's going to start to fade fairly soon. But my most important aspect here is the weekly chart. I don't have a sell signal, let alone a sell mode, because it's held above the 9-period moving average. But the MACD, if you look here, you'll see this vertical line, this pink line in the weekly charts. On the left is the daily, in the middle is the weekly, and on the right is the monthly. So I'm going to preface everything I'm about to say by my focus tomorrow night is going to be discussing how the NASDAQ, the Dow, the S&P, the New York Stock Exchange, even the IWM are all only in leg C in the monthly chart. But because the Dow made its low earlier than the others on the monthly chart, it's extended and it's gone to a D. That says to me that looking out, we're still going to get leg Ds in the monthly charts of the other indices, so the Dow will then follow. So I want to put this together. If you want to hold on, that's fine. Otherwise, I'm going to be discussing it in a moment.
Thanks so much, Basil.
Okay.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. I'm not sure if John's still listening. John, are you there? Sometimes John goes back into the den. Yep, he's in the den. Okay. Oh, yeah. Is that a yes? No, he's gone. Yeah, so John is listening in the den, our Tiger's Den, folks. That is a wonderful medium. If you're a full-time listener or even a part-time listener, and you want to keep coming in to find out what's going on, that's a great venue. So let me go on now. So this is what I'm looking at in the queue. If I'm correct, then at any point within the next, today's Wednesday, right? Yeah, Wednesday. So between now and tomorrow at between 2 o'clock and 3 o'clock, we'll find out a lot more if the QQQ series, which basically has been holding up the market all this time. And what I wanted to say to John is, if you're looking at my charts, the middle chart, which shows right there at peak D, a little mild peak D, look how strong the MACD and stochastic were. But look at peak E at 113.46 the week of the 7th of April. Look how weak the stochastic is. It's still strong in terms of being over 80%, but look how much it's turned down, and it's still turning down. Look at the MACD. It's just about to either deflect higher or break to the downside. My contention is, and boy, I could be completely wrong about this, but I am going to discuss it, and I can talk about it on a purely technical basis, is that the QQQ is having a consolidation. And because what you find is that when stocks or sectors are so strong, either there's this incredible inverted V-shaped pattern where they just turn around and the next thing you know, they're on their way down, like what I call the Eiffel Tower, straight up, straight down, or they constantly, the buying is just, there's disbelief that you're going to go down. So buying keeps coming in, but we then find out that there's either a head and shoulders pattern. You see the shoulder on the left in the daily QQQ. You see the head, typical. And now you see the right shoulder. And then you find that the buying is like wheel spinning. It's like being in sand, driving in sand. And the wheels just keep spinning, or in the ice that we have around here in the wintertime. And you start to head backwards. And that's really what I think is going to happen, that at any moment we're going to find that out. So let me just do this quick thing here. Amazon. Good candle, but weekly candle's not bad. Daily's up $4, but look, it's really struggling. Look at the MACD and stochastic. All of these are very poor. I think there's a right shoulder failure pattern, and I think that Amazon is going to fail fairly soon, and it will fail. It's at 908 right now, but if it starts to close under 896 in the next 2-3 days, that's going to be the signal for me. Let's look at Google, and I still go to Google because that's the one I like. Google A, B, C, it could make a leg D by going a penny above 842.45, the high of the 5th. Then you've got to be careful. And then I'm suspecting that we're looking at this pattern here. Now, I'm going to be completely wrong if these things are just refused. This is their break for a breather. They're refueled, and they're on their way up. And all I can say is that if any one of these goes to a new high, Google above, this is Alphabet, of course, above 853.50, I'm wrong. If Amazon goes above 923.72, I'm wrong. Let's look at Apple. Apple just can't get out of its own way. I think Apple has a chance here to pull back. It's at 141. I think 138 is my target in the next couple of weeks. So that's what I'm looking at. Facebook, very good. Very good action. 142. It made a peak F. I've got it as a peak F, and everything was negative, but this is very good buying, up 2 points today. Nice candle. We'll see what happens. So Facebook is the one that really has residual strength. But if I look at most of the others, price line, I'm pretty sure that the high that was made recently there, right here, you had it in the price line at 1769.18 right now. It went to 1798.75. The next day it went to 1787.5. That's a Chapman wave 2-bar rogue wave reversal. That was on the 28th of March, and it's been pulling back ever since. If price line closes below 1724-ish, it's at 1795. That sounds like a long way away, but hey, this has been making lower lows and lower highs. Now, the only thing is that this has got a peak C. No other way I seem to be able to count it in the daily chart. Oh, but wait a minute. What was the high there? That was 1693, 1605, 1600. Wait. 1600.9. Oh, okay, maybe that's A, that's B, that's still C. I remember I worked it out every which way and it didn't come out. So price line maybe pricing go a little higher. I'm not so sure, but I'm looking at these charts and I'm just saying to myself, everything about it suggests a timeout. I'm not saying a major sell signal, but I am saying a timeout, and we actually are short via one of the inverted ETFs in the QQQ series. So that's the way I'm looking at it. And you know what? Because all of everything we have right now is at a profit, the longs, the shorts, whatever it is. I've been able to tighten up the stops. We took a profit this morning in one of our shorts, a small profit, but a profit nevertheless. And I think I'm going to be re-entering by tomorrow morning. So we'll see what happens. Okay, so the answer, John, the question is, where are we? And the answer is, and really your question is, can the Qs break out and go to another all-time high? My answer is, well, I haven't got the sell signal yet in the weekly chart, but everything about my analysis suggests that it might not break to the upside, but it also might not break to the downside. It might take time, and time is really important because time says you're usurping the energy that you would have had for the downside, and it gives you room to go back to the upside. That's kind of the way I'm looking at it right now. And I'm going to make it just absolutely clear. A close above not 113.46, because that'll only start leg F in the weekly, but a close in the 114.60 or higher in the QQQ series by early next week. And I'm just going to say, you know what? It might all be over. I am thinking that some kind of bad news based on my Chapman Wave methodology here in the 120-minute chart and then the Dow daily chart will take us down just below 20,400. And at that point, I would not be surprised if we actually get a stronger rally in those stocks and sectors that have been very, very weak. And that's where I think we get the big test in the QQQs. Hope that helps you. Okay. Now let's go on, because there was a question I had about IBB. Someone couldn't hold on, but I want to know about IBB. So the IBB is exactly what I've been talking about. Remember what I said, that you could usurp time, maybe not so much price, and that's like correcting. Well, the IBB, which is the S&P, the iShares of the NASDAQ biotech sector, has done just that. It's gone nowhere. If you were trading this, you would have just got chopped, and nothing would have happened. And I'm thinking A, B, C, D, E, F. Yeah, so we're looking at a range in the IBB between 284, which is the 200-period exponential moving average, and if it gets there, if it doesn't rally from that stage, then it can continue down. But on the upside, it's at 290.62 right now. You see that candle? See the trend line that if I had to draw it in there? Let me just do that for you now. You will see that it's just been stuck, and it keeps being repelled. Now it broke out of that one, so there's a shorter one, and I'm going to just draw it in right here. And the shorter one says right here that if the IBB breaks into the 292s by tomorrow, you could have a cup formation or a rectangle formation that says, okay, good, I can go to the 294s and then come back down again.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back. So a couple of questions came up, which I'll deal with because this is part of what I'll be looking at tomorrow night. A lot of talk has been going on about the XLF. Well, where did I just put that? Oh, I just did that by mistake. Let me just do that. Now go back and say the XLF, which is the S&P Select Financials, XLF, Spider Fund. So this is I don't know what the low is today. Yes, a few days ago, the low was 22.90, 22.89. So I'm going to be discussing and showing a relationship of the S&P to the BKX index, which is the Keith Brewer financial index or bank index. And we'll be looking at that, and I'll show you the parallels between the patterns that we're looking at. But the XLF, this isn't a mistake. I'm sure that if anyone was a bear today, you would love to have seen it down at 20.91. So they'll fix that up. That's an error. I don't know what the low is today, but most importantly, you can see that here as well. It's closed above the 9-period exponential moving average since the 16th of March. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26. Around about 26 sessions, and has closed once at this peak B minus in the arch formation above the 9-period exponential moving average. So I think it's kind of getting ready to have a bit of a bounce. That's why I thought we would have a failure late this afternoon or early tomorrow, going into maybe Thursday or maybe even Friday, based on the news. And when the news over the weekend comes, or the voting or the schmoting, whatever it is, Monday we start a very nice bounce, a much bigger bounce. But I'm not sure that that's the one that has the cues spiraling higher, breaking out, or whether it's one that just involves those areas of weakness that we've seen up until now. And that says that the XLF would have to get is at 23.22. It hasn't broken down. And Goldman Sachs, look at this. Goldman Sachs is not looking very good. Down, it's up 29 cents today. But look, almost at that 200-period moving average I spoke about yesterday, 212.50s. And I think that's going to be at this point, that's a magnet. So it can keep bouncing, but it's going to retest, maybe slip under it. And then it'll have a rally to the upside. How long that lasts is another question. Morgan Stanley has had another move, a gap up today on news. It's not quite holding the gap. It's only up $1.16 at 42.36. So I'm looking at the financials and I'm saying to myself, everything about the chart suggests time, I'm not yet sure about the price, but definitely time. Okay? So that's the way I'm looking at this. And that seems to fit with the whole idea. Remember, tops are sequential most of the time. It's rare that you get an amazing, every index makes us top within 2 days or 3 days as the Dow and the S&P and the QQQs and everything made their lows back in March of 2000, between the 6th and the 9th, and very close to that, of 2009. It doesn't happen. They spread out. They have their own momentum. But there's an emotional climax at bottoms. That's why you get a V-shaped recovery most of the time. Okay, with that said, the XLF, I believe, is going to take more time. Goldman Sachs, Morgan Stanley, JP Morgan. Remember, I had a price. It was Lou, I think, in New Hampshire, called in, and I said, Lou, just have patience. I'm looking at it between, I'm almost sure that I said between 87 and 82, and it was way up at 90, 92 or something like that. And I said, and I wouldn't be surprised if we're looking more towards the 82 area. So I'm standing with that as JP Morgan. That's where I want to kind of look at it and say, okay, is it time now to step into the financials if you missed the financials on the way up? Now let's look at this, and I'll be talking about this tomorrow as well. There's a pattern that I look at in the dollar that has a relationship to the stock market, not in percentages, not always in just price, but in the general, how can I put this? In the general tide. Right? Remember, I like to talk about tides. I'm talking about that on Thursday night. I'm talking about tides. And the tide of the dollar has been struggling for quite a while. It made its most recent high on the 2nd of March, and it's been making sharply lower lows and sharply, the bounces have been sharp, and then the retracements back again are sharp as well. And it's telling me that probably the dollar's weakness could correspond a little bit to what we're looking at in the general market. Now, keep your eye on the middle chart. That's the weekly, way longer consolidation in the dollar. And we've only just started this consolidation in the Dow and the S&P. So this is the reason why I'm not sanguine about the NASDAQ. I think it's had a spectacular move. I think that the upside might be limited. At this point, I don't have anything to say that there's a sell signal even a sell signal in the weekly chart, but I'm pretty sure on Friday at 4 o'clock I will have something to tell me whether I'm right or wrong. So we'll discuss that on Thursday night. A lot of things. I want to be owning the banks, the financials, but you know what? Without the TLT, look, the TLT. What I spoke to Tom when I was interviewed yesterday is the Chapman Wave Stalk Formation. Let me just do this real quickly. INDU. Look at that monthly chart. This is the Chapman Wave Stalk Leg Formation. There's the big oval pattern, and it broke out. This is the neck. So that's the body. This is the neck. And we haven't started we don't know if we've started the head yet. I don't think so. But wait a minute. Let's go back to the TLT patterns. Repeat. Except when the pattern has almost a one-to-one movement for the neck and the leg to the body, which is like what I would call that, a propeller shaft. Then what I'm looking at is that the correction in bonds is going to be shorter term. We might not even we might touch 122.25 was the high of the 7th. That's the body, the top of the body. It could even be the breakout. So I'm being as conservative as I can, but to be a little more aggressive, you could go deeper down. But I think that the 122.93 area, just a point lower, is going to be where the TLT holds if it pulls back at all. I've got this as B/F right here, F/B, I'm sorry, F/B in the daily chart. I think it's more like a B. I think that yields are going to go lower and that bonds are going to go higher. Why? Because I think money's going to come out of equities and go into the so-called safety of bonds. Okay, now if we look at the GDX, what I drawn and showed my subscribers the other day was the GDX had the Chapman Wave Stalk Leg Formation, which had the one-to-one. The difference was that the Mackie and Stochastic was showing signs that there could be a pullback, and that pullback could go to the body high right here of 23.56. Today we've just hit 23.56. Unbelievable how that happens. I typed this in: leg, body, neck, head, beak. Now I can start. I don't want to put the down arrow just yet, but I might be putting it. And that says to me that gold is exactly what we were talking about before. Let me get the relationships. That gold is still looking fabulous, looking out. On the shorter term, I think that gold is going to come under some pressure. Great British pound, and I'll be discussing some of this, not everything. I won't have time tomorrow, but the Great British Pound, BP, the Great British Pound had a spectacular run to a peak C. It could still make that D. I don't think this is real. I think this is a little bit artificial, and that tells me that the dollar. And that's the reason why I'm saying next week maybe we see something happening in the dollar, that the dollar could have another bounce and it will be stuck in a range. And as long as the dollar doesn't break below 98.50 in the next 2 weeks, range bound it is. If it starts to break under 99.20 in the very short term, let's call it 99, then I think that's going to impact the market as well. I'll be right back. Basil.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. I had a question from Warren about MDC. I haven't looked at MDC for a long time. Was this Meridian Holdings or something? It's a housing. They're in the housing market, a major regional home builder, significant presence in Colorado, Florida, Las Vegas, Maryland, Northern California, and crossed into New Hampshire territory yesterday. In Denver, they're in love. Yep, must be the same one. Yes, this is looking really good. Just on a short-term basis, when you make this cup formation, and you don't close above it, so this is going to be really important. I'm suspecting that it does pull back, makes a bit of a handle pattern, 31 31.24 was the high on the 16th of March. It's at 31.26. Made the cup formation, made a little H, which changed into this is when I have those two conflicting bullish bearish patterns. The bullish pattern won, and it's gone higher, and it's gone to A, B, C. This is leg A, B, C, D, E. This is probably leg F in the weekly. I'm saying if you're holding it, it looks fabulous. If you're looking to buy, this is one of those tough things. I'm going to say, because I know that you're looking at a longer term, I would just start a very small position at 31.25, but you're going to have to give it 2 points. And then I would say to you, watch it closely. If it does start to pull back, 29.65 to 29.40, that's kind of the area that I think would be good. That's the real entry that I would like. That's actually the entry I'd like to make if I was wanting to buy. And there I would have a 1.5 point stop. But so that's really that's what I'm looking at. Yes, I'll do more on it tomorrow. So I'll put MDC and just remind me tomorrow because we're about to run out of time. Good eye and yes, good analysis. So while we're looking at this, let me just do this once again. Let me show you. I'm going to show you the schematic of the Chapman wave buy mode. I'm going to be discussing just so many things. Look at this chart here. I haven't quite finished my webinar. Well, actually, I haven't. I could do it right this minute. I'm going to show this relationship. Look at the Dow, the S&P, the QQQ, and the transportation index. And they're all pulling back, but none of them have broken the uptrend support lines. I think they're going to go towards those lines, and that's my thinking. And the IYT is leading the band by pulling back. So just be real careful here. That's what I'm looking at. And then I'll talk about the SMHs in relation to the S&P. I'm going to be talking about the where to go here. And the bank, there's the bank, the BKX index versus this is the S&P. This is the bank index. What is it telling us? Is this bullish or bearish? What are the implications? Is this something you want to be looking at? Where would you be buying? Those are the things that I'm going to be talking about. I think it's going to be a very beneficial type of webinar in the sense that I'm going to be looking at it as what would you do if you were looking at it fresh? What would you do if you already have positions? And what would you do if you're kind of fully invested and you really are not sure now what's going to happen? That's the way I want to look at it. So, folks, have a great rest of the day. We're about to wrap up. Great programming come up. There is time. Go to the front page of TFNN and sign up for my webinar. The moment you sign up, you'll also be getting my newsletter. The people who just, look at this. We bought something the other day, ESNT, just a few days ago, in the 3710 area. Today it's at 39.12. Leg D, yep, we've got to watch it closely. But look how strong the technicals are. S & Company Mortgage Insurer. So hopefully people who just signed up actually are going to get their money's worth. I'm doing my best to see to that. So webinar tomorrow night, Thursday night, 6 o'clock till 7:30 Eastern Time. Free to subscribers. You can become a subscriber, even if it's just a trial subscription. I'm going to be very comprehensive about it. And I'm going to be covering areas that I think are really important. I will also be covering the interest rates, etc., as I just did with the TLT. And gold, I think is really important. I think gold is a fear factor, and I think it's going to be current all the way through the year. So I'm thinking that gold is something that you should start to put in your portfolios if you haven't already. That's the way I'm looking at things. So, folks, have a great day. I think I did do the GDX. I hope that helped you. And unwinding. Yeah, there it is. Okay. Thanks for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.